The term private markets refers to assets that are not traded on public exchanges. As opposed to listed equities, which can be bought and sold on a daily basis, private assets are illiquid as they have no securitization or digitalized secondary markets. As such, private market assets are typically held for longer than listed securities, and during an investment period, ad hoc sales of these assets are not generally possible. Private assets can be found in many different markets and include private equity and private debt, as well as tangible assets like real estate and infrastructure. All in all, private markets represent a much more extensive investment universe than public markets, and accordingly, they offer greater potential to capture long-term opportunities with compelling returns that are under the radar. Private market investing opens up a vast array of strategies and assets, providing investors with a variety of unique return drivers, and many of these strategies can't be found yet in public markets. Opportunities can range from iconic sports franchises to fast-growing tech companies, and from government real estate to space exploration. An interesting example of an emerging strategy that's well established in private markets but still relatively undeveloped in public markets is music royalties. This strategy involves acquiring the intellectual property of musicians and songwriters, whether established or new. The returns provided by this asset class are compelling for a number of reasons. For one, musical intellectual property can be licensed in exchange for a royalty or fee payment. Royalties come from many sources, for example, performances, downloads, and the use of music in films or TV shows. Unsurprisingly though, most of the income growth is being generated by the fast rise in streaming platforms. Streaming generates recurring, non-cyclical cash flows as people listen to music no matter the state of the wider economy. In addition, there's plenty of room for growth as streaming penetration rates currently stand at 8% globally, although in more developed countries these rates have reached over 20%. Whilst this asset class can provide attractive passive income, there's also significant scope for active management by fund managers who can successfully market their musical intellectual property catalogues. These efforts can translate into higher income generation and ultimately higher market values, opening up the possibility for an investor to make significant capital gains on the sale or listing of such assets.